Hello, and welcome back to the channel. I'm Algabot, and this is where we break down automated trading strategies for the MetaTrader 5 platform, line by line, in plain English. Today we're studying an expert advisor called Stair Step Trend Continuation. It's a pure price action system, with no indicators used at all, built around a simple observation. Healthy trends tend to climb or descend like a staircase. Over the next several minutes, you'll learn how this approach reads market structure, how it waits patiently for a pullback, and exactly how its entries, protective stops, and targets are calculated. Just a reminder up front, this is educational information only, and it is not financial advice. Let's get started. Let's start with the big picture. Stair Step Trend Continuation is a trend-following expert advisor, and what makes it interesting is that it uses no indicators whatsoever. There are no moving averages, no oscillators, and no smoothing of any kind. Instead, the strategy reads the raw structure of the market directly from price, using nothing but the open, high, low, and close of each completed bar. The central idea is something many traders observe on a chart. When a market is genuinely trending, it rarely moves in a straight line. Instead, it tends to step. In an uptrend, price makes a higher swing high, pulls back to a higher swing low, then pushes to another higher high, and so on. It looks like a staircase climbing upward. A downtrend mirrors this, printing lower swing highs and lower swing lows, stepping down. This expert advisor is designed to detect that stair-step structure and then participate in it. Rather than chasing price at the top of a move, the strategy waits for a shallow countertrend pullback inside a confirmed trend, and then looks to re-enter the moment price resumes in the original direction. The protective stop is placed just beyond the low or high of that pullback, which is the natural point where the idea would be considered invalid. The target is then set as a fixed multiple of that risk, defined by a reward ratio you can adjust. Because it relies on clean swing structure, this approach is generally studied on trending instruments and on a single time frame at a time. It only holds one position at a time per its magic number, so it stays simple and easy to follow. As a learning tool, it suits traders who want to understand market structure and pullback entries without the clutter of indicators. As always, every strategy carries risk, losing trades will occur, and nothing here is a recommendation to trade. Now let's walk through the exact logic, step by step. The expert advisor acts only once per newly completed bar, so it never reacts to an unfinished, flickering candle. When a new bar forms, it stores the bar that just closed and updates its picture of market structure. The first job is detecting swing points. A bar is treated as a swing high if its high is strictly greater than the high of a set number of bars on both its left and its right. That number is the parameter called pivot length. A swing low is the mirror image, where the low is strictly below the lows on each side. Because the strategy needs bars on both sides of the center, swing points are only confirmed after enough bars have closed around them. Next, the strategy compares the most recent two swing highs and the most recent two swing lows. If the latest swing high is above the previous swing high, and the latest swing low is above the previous swing low, it considers the market to be in an uptrend, a confirmed stair step climbing higher. If both the swing high and the swing low are stepping lower, it considers the market a downtrend. Inside a confirmed uptrend, the strategy then counts the pullback. It looks backward from the prior bar and counts how many bars in a row closed lower than the bar before them. If that run of falling closes meets or exceeds the PullbackBars setting, a qualifying pullback exists. The signal to enter appears the moment the current bar closes back above the high of the prior bar, which the strategy reads as the trend resuming. At that point, it records the lowest low across the pullback as the pullback extreme. Now the trade is defined. For a long, the entry is the current ask price. The stop loss is placed at that pullback low, minus a small buffer calculated as stop buffer PCT times the current bar's range. The risk is simply the distance from entry to stop. The take profit is the entry price plus that risk multiplied by reward ratio. A downtrend works the same way in reverse, counting rising closes for the pullback, entering when price closes below the prior bar's low, with the stop just above the pullback high. The strategy holds only one position at a time, so it never stacks trades. Let's read through the MQL5 code you see on screen, just as you'd see it in MetaTrader. At the top are the input parameters, the dials you can adjust before running the expert advisor. PivotLength sets how many bars must sit on each side of a swing point. So a larger value demands a more significant, slower swing and produces fewer, cleaner structure points. Pullback bars is the minimum number of consecutive countertrend closes needed to qualify a pullback, so raising it asks for a deeper pause before entry. Reward ratio defines the take profit as a multiple of the measured risk, so a value of 2 aims for a target twice the size of the stop distance. Stop buffer PCT adds a small cushion to the stop, expressed as a fraction of the current bar's range. Lots sets the order size, and magic is the identification number that tags trades belonging to this strategy. Below the inputs is the heart of the signal. The 2 Boolean values, up and down, read the confirmed swing structure. The strategy is considered to be in an uptrend only when the latest swing high is above the previous swing high and the latest swing low is above the previous swing low. The range and buffer lines then size the stop cushion from the current bar. In the uptrend block, count falling measures the run of consecutive lower closes ending at the prior bar. If that count meets pullback bars and the current close pushes back above the prior bar's high, the entry conditions are met. The code then finds the lowest low of the pullback, reads the ask as the entry, sets the stop just below that low minus the buffer, measures the risk, and finally computes the take profit as entry plus risk times reward ratio before sending the order. Let's watch how this plays out on the chart. Notice there's no oscillator panel here because this strategy uses no indicators. Instead, the gold line traces the swing highs and the blue line traces the swing lows, and together they form the stair-step structure the expert advisor reads directly from price. Watch the left side. Price prints a higher swing high, then a higher swing low, confirming a stair-step uptrend climbing the staircase. After that push, price stalls, and we get a short pullback, 2 bars closing lower as the market pauses. This is the shallow countertrend dip the strategy waits for. On the next bar, price closes back above the prior bar's high, signaling the trend has resumed, and the buy entry appears. The protective stop would sit just below the low of that pullback. Price then continues stepping higher, swing by swing, until it reaches the take profit level, which was set at twice the measured risk. The long idea has played out. Now follow the right side of the chart. Price rolls over and begins printing lower swing highs and lower swing lows, the staircase now descending. Within that downtrend, price drifts back upward for a couple of bars, a higher closing pullback against the trend. The moment a bar closes back below the prior bar's low, the strategy reads the downtrend resuming and the sell entry appears, with its stop placed just above the pullback high. Price then falls toward its take profit, again a fixed multiple of the risk taken. So in both directions the pattern is identical. Confirm the stair-step structure, wait for a shallow pullback, then enter on the resumption. This is an illustration for educational purposes, and real markets will not always behave this cleanly. Losing trades are a normal part of any approach. That brings us to the end of our walkthrough of the Stair Step Trend Continuation Expert Advisor. Today we covered how this pure price action system reads swing structure to confirm a stair-step trend, how it waits for a shallow pullback, and how it defines its entry, its protective stop just beyond the pullback extreme, and its target as a fixed multiple of risk. We also walked through the key parameters and the core MQL5 logic line by line. Remember, everything in this video is educational information only and not financial advice, a recommendation, or a solicitation to trade. If you found this analysis helpful, please consider liking the video, subscribing for more MetaTrader 5 strategy breakdowns, and leaving a comment with the strategy you'd like to see next. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.